Hi, folks. Markets just snapped back to reality. After a few weeks of calm and rallying tech stocks, volatility is back, tariffs are back, debt worries are back, and Wall Street is scrambling. But if you're a long-term investor or you're within 10 years of retirement, what you do next could either cost you or build real wealth. Let's walk through what just happened, why it matters, and what smart investors are doing now. The biggest shock? President Trump just threatened a 50% tariff on European imports, starting June 1st, and a 25% tariff on Apple iPhones, unless Apple moves manufacturing to the US. That's not just political theater. It's market moving. Apple fell 3% on the news. The S&P 500, Nasdaq, and Dow all dropped. Just a week ago, they were back in positive territory. Now, back in the red. And tech, the same sector that just led a rally, Nvidia, Microsoft, and Amazon all slid. This isn't a correction. It's a warning shot. Congress passed what they're calling the One Big Beautiful Bill, a tax and spend monster projected to add $3.8 trillion to the national debt. That brings our total to $40 trillion over the next decade. The bond market hated it. Yields on the 10-year Treasury hit 4.57%. The 30-year touched levels we haven't seen since 2023. Moody's even downgraded U.S. credit. And yes, stocks tanked again midweek when bond auctions flopped and fears of fiscal instability grew. This isn't opinion, it's math, and the market is doing the math fast. The latest data shows something we've been warning about. Inflation is building again. Input costs jumped to the highest level since 2022. Companies are stockpiling materials, preparing for more tariffs and price hikes. They're passing those costs to you, the consumer. And to investors, it means margin pressure and more volatility ahead. Now here's the opportunity. For the first time in a long time, we're seeing a true stock pickers market. Correlations between stocks dropped hard last week. That means company fundamentals, pricing power, cash flow, execution are finally mattering again. This is where investors who own great businesses directly, not in index funds, win. Because ETFs don't adapt, but smart portfolios do. So what now? Don't panic. Volatility is normal. But blindly owning the whole market isn't smart right now. Own the right companies. We look for firms with pricing power, domestic supply chains, and strong balance sheets. Avoid behavioral mistakes. Don't sell great businesses because of headlines. This is where long-term wealth gets built, quietly and patiently. If wealth is your goal, own great businesses. Everything else is noise. And if you're sitting in cash, wondering when to get back in, don't wait for clarity. The market doesn't give it. But we can. Let's talk. Book a call below. Subscribe for weekly market breakdowns that actually help you think and act like an owner. Stay the course. See you next time.